Very good morning to you. Welcome to Trade Live with IG on Monday, the 9th of June. Because
not the
10th. I just said to Chris, oh, Chris, it's the 10th, isn't it? He said, no, it's the 9th. I've just sent my mum a happy anniversary text for tomorrow. So for the second time this month, I'm a day ahead because I paid my rent a day early as well.
It's just efficiency.
Yeah. Okay, so I take it back. Camilla, happy birthday tomorrow. Mum, happy anniversary tomorrow. Chris Beecham, how was your weekend?
It was very nice. We put into London and we took the youngest to the Natural History Museum, which was very busy. As ever, it's always heaving there, isn't it?
It
I mean, you would know, you must pass.
Monkey Man thinks my microphone's not working properly.
Is it working now?
Do you mean the sound, Monkey Man, or do you mean that it's at a bit of a tilt? Oh dear. Well, Chris Beecham, carry on.
Oh, sorry. Yes, always heaving in the Natural History Museum, but it always was lovely to go. The youngest hadn't been, so we saw the dinosaurs and the whale. What else did we see?
The big
whale in the hall, yes. We didn't go in the creepy crawlies because I don't like those. 3? I can keep going because we can't hear you. Is that what we're doing? Okay, Rich can't talk, so
testing.
We've managed to silence him for the
sound
first time.
far away.
Far away?
Yeah.
This Richard isn't very small, he's just far away.
Does this help? Well, I tell you what, let's go to what's coming up on today's show, and I shall go out and get this checked out. So if we can put that full screen, Chris Beecham will take you through what's going on.
We start off with overnight action with Rich and myself, and then we go on for 8 o'clock, the opening bell. We'll see what's going on with those moves following Friday's strong finish in US markets. Then 8:20, of course, as ever, fast markets, and it's the favourite pair, Chris Beecham and Rich McDonald. And then finally you get a change of scene at 8:35 with live from the trade desk when Angeline will be joined by the one, the only, the irreplaceable Matt Arbour. And then 9 o'clock, all sessions opening a bell with Angeline, and then at 9:20, investing experience. This is a new one, isn't it, on me?
That's right. We've got Philly coming in, so she is our money expert and runs some great courses as well. So Philly's coming in to give me a bit of a money makeover.
Oh. And then finally, 9:40, Axel is going to unveil that closely guarded secret that is the trade of the week. I try and get early access, but he won't give it to me for love.
Me neither.
Nor money. So
I even try and look over his shoulder to see what chart he's loading up. But right,
very handy with a left hook to get in the way.
Okay, so we're good. That was, to be honest, I wasn't saying anything relevant other than I got the date wrong on the open to the show. Anyway, so welcome. It is Monday, the 9th of June. It's a big day. We're going to talk. I should have just kept him muted. Very good. Let's go into overnight action.
That's so very cool. Everybody's a comedian.
Right. So we've got US-China trade talks here in London. We don't know where they are. We've sent Angeline out to go discover across London and try and find out where these secret talks are happening. We don't think it's at the US Embassy. We don't think it's at the China Embassy. There's certain, like, Excel centres busy. The one across in West London's busy, so we're trying to find out if it's at a hotel or something like that.
It's somewhere very quiet because they kept the first set of talks in not the ones in Geneva, but the ones in Washington, very, very, very quiet, didn't they? Essentially just meeting in a basement. So, yeah.
One place. So my ex-girlfriend from 15 years ago and I went to for a spa weekend at the Grove, and it was beautiful.
Near where I grew up.
All the treatments.
Yeah.
And there was a lot of security there on the way in. And we found out it was the G7 going on that nobody knew about. So anyway, we're sitting there having lunch after one of the treatments. And this guy in a suit kind of, walks out of a meeting room with a big entourage behind him. And he looks at us, and he must have thought that we were something to do with it. And he came over and shook my hand. And I said, oh, lovely to meet you. And he looked down at my ex-girlfriend's lunch, and it was a burger, but a big plate of chips. And he looked at them as if he hadn't eaten for 3 hours. So she said, oh, would you like one? Help yourself. gave him a chip. Turns out it was Kevin Rudd, the Australian Prime Minister. And that was right. It was 2008. It was when Rio's BHP bid was going on. So yeah, he was in the spotlight at the time. I didn't recognise him.
Really interesting place, the Grove. You know, it's got tunnels all underneath it.
In the Grove?
Yes, underneath, built during the war, because it was the one of the railway companies moved out of London, and the Grove was the headquarters they used for the duration of the war. Yeah.
Right. God, what it must be like to be a historian.
It's exciting.
So Natural History Museum was exciting as well then?
Yeah, it was. It's always nice, isn't it, to take them around and show them all the nice bits and bobs.
There always seems to be a long queue though.
There's a massive queue. So I gave up and decided we'd become members. And we discovered the members area is lovely. So, you know, shameless plug for the museum.
Hang on.
It's a free museum. It's free to get in, although...
It's free. Donations are welcome.
Yes, there's about 6 donation points. I thought if they said, if you give 20 quid as a donation now, you should go straight in. I thought it'd be quite a good plan for them, actually. But yeah, I thought I couldn't wait 45 minutes.
So how long did you wait in the queue before you thought you'd pay up for a membership?
All of a minute.
A whole minute?
5.5-year-old, I thought, he's not going to wait for 45 minutes, is he?
So anybody that is ever going to Natural History Museum, taking your children or just fancy a nice day out, there's a secret entrance around the side, okay? So you go on to Queensgate, you go into the nature garden, and you weave your way through the nature garden, and there's an entrance there that nobody knows about, and you walk straight in, £6 donation, and you're in. Or you can become a member.
Yeah, well, you can support these things.
Yeah,
they're worthy of support.
And it is worth it to go. It's incredible.
It is.
Anyway, right, so is the US-China trade talks taking place at the Natural History Museum today?
Maybe.
Well,
Maybe that's why the queue's there, I suppose.
It could well be. Or is it in the same destination that Jensen is here in London as well? We've got London is having a big day today. So, of course, it is the Tech Week in London, and NVIDIA are presenting. So I do wonder if there's going to be, that's not a coincidence, because the focus on US-China trade talks now is not the tariff number. I don't think the tariff number comes down anymore because it's already come down substantially, but he has to get his big, beautiful bill through the Senate, which means he needs the revenue or the perceived revenue from the tariffs.
Yeah. To sort of tide it over,
through,
promise. Because is the bill going to pass? Are they still likely to get it through?
Who knows? Maybe with amendments.
Yeah, because the hard-line Republicans, I think, have fallen into line,
right?
Haven't they? So they're the ones that kind of really don't like all the spending. But of course, this is the bill that's either big or beautiful, according to Elon Musk, and so that's
you can have big and ugly or small and beautiful.
Yeah, and he hasn't sold the Tesla yet, has he? But there's rumours that he's going to sell the Tesla that he bought.
Oh, Donald.
Yeah, the one that's still sitting there.
Or give it away.
Yeah.
So these US-China trade talks are going to be focused exactly, as Funky Gibbons says, rare earth. They are going to focus on China opening up their rare earth exports, and in turn, US giving a bit of leeway on potential tech and chips into China. So it's going to be industry specific, and let's see if they get something done today. But Besant and Lutnick are there.
Are they going to argue in front of the Chinese delegation like they did in front of the Japanese delegation? This is incredible. Imagine sitting there while the two of them hammer it out in front of you. They just bicker.
Yeah.
The entire cabinet seems to be because there was a whole Besant-Musk thing. Musk pushed Besant, and there's a report that Besant might have punched him, actually.
Is that where the black eye came from?
Yeah, we think so. Exactly.
Right, let's have a look at the front page of the Financial Times today. What do you do if Elon's just barraged you with a lot of tweets? Well, you send in the
National Guard.
National Guard.
Yes, you distract, you move on, you keep the show going. This is Trump, classic Trump in action. If you have a bad day in the news, do something crazy, because then everybody moves on. And now we're focusing on the President of the United States essentially, I don't know, invading LA? I'm sure some people would put it that way, I'm sure, because you could find tweets from Republicans from a couple of years ago saying the sending troops into a US city is permitted, all this kind of thing. It's okay when we do it though, because that's different. But
I must admit, if we were seeing, like back in 2011, I'm very happy for the army to be sent in then.
You're one of those.
London riot.
You're one of those. Okay.
If you're getting people smashing up windows in Clapham to get into shops and raid them.
But it comes to a point where does it inflame tensions? And was the instance in LA last week bad enough, or sorry, to require?
Exactly.
Was it really at that level?
Yeah.
Or
we just for protest.
If it's a few people, and clearly there was footage of people getting in the way of the vans and that kind of thing. So
yeah.
But was it worth it? Clearly worth the headlines, obviously.
Well, and as with everything, the media makes so much more of it than it is. They go and they search for the one car that's on fire, or the
Yeah, I know we've discussed this before. How it's a perception, isn't it? You just you don't get a sense of what it's actually like on the ground because right.
People are still on the beach in Santa Monica.
Yeah, of course. Yeah, precisely. So.
Okay, so. Yeah, elsewhere, let's have a look at that story there. So China's exports to US plunge as trade talks loom. So this was the numbers overnight. And we see that China's exports to the US plunged last month by the most since the beginning of COVID-19, all those years ago.
So 5 years, wow. But this is market reaction.
Muted.
Not a thing. I mean, this time last week we were talking about the Hang Seng. We are 1,400 points up from where we were last week.
Is it that much now?
1,400 points. It's just gone.
What's that in percentage terms then?
Don't make me do this live on it. A lot. Well, quite a bit in the space of a week. But yeah, 1,400 points in a week. So the Hang Seng, you saw it go down. Second half of May was, 1,000 points lower. It's now 1,400 points higher. This is again how uptrends work. So before we start to forget, this was an uptrend for this market. But yeah, off the back of this morning's data, nobody cares.
No. Right, that takes us nicely onto the economic calendar for this week then. What have we got coming up? It's going to be interesting. Wednesday, CPI, high of the week, or the most important figure of the week, I would say. We also get unemployment in the UK.
Yeah, it's a UK week, isn't it? Yeah, as well.
So are we? Do we stay or do we go? What do we think? Dear me.
There it is.
So yeah, China. We've had that inflation rate out already, down 0.1%. So deflation in China. And then yes, the core inflation rate. So that year-on-year CPI number on Wednesday. Expectation of 2.9%.
Yeah, so they're expecting to finally but is this the beginning of actual tariff impact, or is it just a bit of a bump if you look at the way core CPI has been behaving?
Yeah, let's look at the details there on
trying to get
my screen
figures up.
So yeah, there's your 2.9 expected. That'll be up from 2.8 last month and higher on the month-to-month as well. So 0.3 expectation versus 0.2 last month.
Of course, we were at 3.3 in September and October, and indeed January of this year.
Yeah.
So we're still down on where we were. I says
But the direction's wrong there, isn't it?
Well, yes, in the short term, and the month-to-month figure as well. I mean, it's expected to edge up as well. So this is the key thing of how is this the beginning of something else, or is it just a 2-month blip?
Yeah.
And how are people positioned going into this? Are they still wary of this rebound in stocks? Because if you had Friday's payrolls, which all well and good.
Yeah.
Please be calm. There's no problems with the economy, and reduces the pressure on the Fed to do anything at all, really.
Big question is, who was closest? We know that Angeline was about 7,000 jobs away from being correct. But Producer Phil, there she is cheering outside. Have you found out where those US-China trade talks are yet, Angeline? Come on. Producer Phil is going to go through the chat from Friday and work out who was closest to that jobs figure. So, yeah, we had it was reassuring was the best way to put it. I think inline, boring.
You're such a
reassuring.
bear. You're so bearish. How can you? That was a very good jobs report. It was above expectations. Unemployment rate was steady. Wage growth fine. And all you can say is reassuring.
What? It was 4.2% against 4.2% expected. It was 139,000 jobs against
147,
130 expected.
but it didn't plummet, and everyone's still expecting the sky to fall in
agree.
and bad things to happen, and maybe they will. But on the face of it, this isn't happening. It's funny because my parents came around for lunch yesterday, and Dad and I were in the kitchen when I was cooking, and he was going, "Why is this market still going up?" And I said, because people like you think it's still going to go down. He's not bearish, he's still invested, but he's as baffled as everyone else. He's sitting at home thinking,
Why is he still invested?
Because he's happy to stick with it for the long term, because he knows his lessons about long-term investing. Because he was pass it all on. But I think his short-term point is look at the data, look at the backdrop, the news is awful, the sentiment seems terrible, and yet the market, as we said, doesn't seem to care.
Well, so that's what Philly and I are going to be speaking about at 9:20 this morning. What are the alternatives to the S&P 500? She speaks to a lot of investors that are, relatively high net worth as well. What do they do? Do they have S&P 500 trackers? And for those that really, you saw the S&P 500 down to 4,800, which is where it should be. Then,
in your opinion,
well, that was my 4,763 was my estimate for the year, wasn't it? That we did on January the 7th. But what we're going to look at today is, right, if you were sitting in an S&P 500 tracker like many people are, and you saw it all the way down to 4,800, you thought, why didn't I sell when it was 22% higher? Well, it's back there now. So are you selling? Because you said to yourself, why didn't I sell? So you've got Second Chance Sunday. So Philly and I are going to be looking at the alternative options. What are the other ETFs that you can invest into? Is it a commodity? Do you hedge yourself in some way? And we're going to be doing that at 9:20.
So I'm just reading apparently the jobs report figure is nonsense. We're waiting the revision. This is the key thing as well. If data comes in and people don't like it, you get this criticism, it's nonsense, which is code for two-tick here. I didn't agree with it. That's not how this works, really. The number is the number, I'm afraid. You can argue, you can rant about it, but the number is the number. It could come away differently next month, but what are you going to do? So
Ange has just given me a fantastic sheet of paper here, which is, she's got them from her sources, the most likely locations. But I do feel we might be a security threat to the nation. Mind you, it's only the US.
I would like to declare now that if you get arrested, I had nothing to do with it. Because obviously the US and Chinese security have famously relaxed about people gate crashing their talk. So if you go and try and say hello, I'm sure they'll let you in.
And there wouldn't be any protests outside US or China talk.
No. Disappeared, really.
That would be interesting. Yeah, that's...
I thought you were going to read them out live on air and encourage people to go.
Well, there's only 4 options because they've got secure meeting rooms.
Right.
Yeah, one of them isn't far from here.
Right, okay. Oh, Lord, that's all we need. So if you do see a convoy running through the city...
Oh, yes.
It's all very low-key, though, isn't it? Because nobody wants to know... Nobody wants them to find out it's actually taking place because it just disturbs people, really.
Will Jensen get an outrider? Will he get the police escort, do you think?
No, that's too obvious. Even the NVIDIA CEO is not that bad, is he, really? Okay.
You don't think?
No. Were you suggesting somebody would kidnap him?
Oh, no, I'm more to get through traffic.
Oh, right. No.
We found out yesterday Tom Cruise gets the underground and he just puts his hat on and sunglasses.
Well, it's mission impossible to get through the traffic otherwise.
Very good. Right, what else have we got to look at this week then? Why don't we have a look at where we're sitting as we stand on these futures? So there we are, 5,995. Are we going to see more productive talks announced before 9 p.m. or the results from productive talks? So surprised to see S&P small down actually on a Monday. They usually love to chuck it up 20 basis points.
They is that word again. But the Friday was a very strong session though, wasn't it? very
Yeah.
back to the highest level now since early March, I think, for the S&P. So
NASDAQ 21,700. The DAX sitting at 24,260.
I'm watching Russell futures currently sitting at their highest level since the 3rd of March as well. So even small caps, even the rubbish that is the Russell 2000.
Yeah, that's actually more tempting to be short of.
Well, if it does come off, I think it would be the short caps, the small caps, short caps, because as the sort of general rule, I think was it Jesse Livermore, you short the weakest and you always buy the strongest, and the Russell's been the weakest index, really. I think it sort of staggered to an all-time high multi-year high last year, and then has really takes. And look at it in 2008, it was one that gets clobbered in 2008. So yeah, if it does go off,
it hasn't made it back to the highs, though.
No, it's still very much under pressure, I think, really. Yeah. So that is the one you'd look at. But
the mighty FTSE, though, why is nobody talking all-time highs on the FTSE? Are we close?
We're about, the March high is 89.09. So yeah, we are close. Yeah.
Nobody cares, do they? Nobody cares that the FTSE 100, our national index,
it's not really though, is it?
Is so close to its all-time highs.
Because you had Wise last week saying it would move its primary listing to the US.
Oh, who cares about Wise? When's Revolut
you had Indivior as well going to the US. So again, it's restarted this discussion about, is the FTSE, is the UK just not a destination for capital? Is it undervalued? How do we reinvigorate it? And there's no answer yet. There's no proper answer coming through from the government, really.
One stock you do have on there is the mighty Scottish Mortgage Investment Trust, and we know why I'm bringing that up. I'm bringing that up because that is our target for subscribers for this week, for Friday, the mighty 1,000 or £10 as it is there. That is our target for subscribers this week. We are currently on 912. That's we're going to have to do something
drastic.
Yeah.
Well, if you got arrested at the China trade talks, that probably gets subscribers up. So
it's viral.
You have to take one for the team, really. Off you go.
Yeah. Well, I've got my list of
got your list.
locations. Oh, I almost showed it there.
Yes. Like those government ministers that get caught with a briefing coming out of Downing Street, and you can read it.
Two of them are government venues,
okay,
and two of them are houses.
Oh, Lancaster House is where they always do a lot of stuff, isn't it, really? That's where they had the UK-French talks.
That wasn't on me.
No.
Where is Lancaster House?
I wouldn't like to say. You can't Google these things, obviously.
And yeah, one close to here that is a size of the house that you live in.
Yes, obviously. Or maybe a bit smaller, I think.
Yeah, and the other two are boring and just either royal areas or government office.
Well, yeah, if they wanted to do it sensibly, they'd do it up in Balmoral or something, completely out of the way, but that's another matter.
Yeah,
really.
Or at the Grove.
Oh, it's great.
Right,
Tunnels.
so yes, we're trying to get up to 1,000. So if you don't subscribe, please hit that subscribe button right now, or give us a like, which helps the algorithm. Then the YouTube gets sent out to other people on YouTube that haven't yet discovered us, and increases our chances there. So good stuff. Right, we're going to take a quick 3 minutes. Go make your cup of tea and put your toast on, and we'll see you for the London Stock Exchange opening bell. That was a good one. That was a good one. That had me perplexed. Steve Davies, you're wrong. It is not NVIDIA. So let's get the chart back up and let's see, because Chris Beecham taking the mick on this one.
Me?
Right, so you can see there, just think, so 2024, how would you describe that as an artistic pattern?
Oh.
Would that look like a bit of a sort of castle?
A castle, maybe a dream factory. See, it can't be NVIDIA because it peaked too early in the year. So it's obviously not NVIDIA, just as you can tell. But yeah, there's maybe a...
Yeah, for me, that almost looks like a kind of...
It's a stock that's got a lot of
faraway
potential, but hasn't really done well. So it might be a bit of a sleeping beauty. Maybe.
It is, yeah. It is.
Just for reference, I asked ChatGPT what this was, everybody, to cheat, and it said it was the Nasdaq 100. So don't trust the AI. Don't believe the machines. When
Here we go. Hamish Yeh, you are correct, sir. That is Disney Corporation, bottoming at $80 in April and now 113. So a nice, sweet 30% return there.
Yeah. You look at the 5-year chart, though. It's a terrible, terrible performer. $180 a share back in 2021.
Really interesting barometer of consumer spending, actually. And I don't think it can have much upside.
Okay, everybody write that one down for the future.
I want to buy them at 90.
And at 23 times backward earnings? I mean, that's not compelling. It's not much of a fairy tale story there, is it?
Yeah, very good. So yeah, I'd be happy selling the strangle there, selling the puts at 90, selling the calls at 120. And I actually don't know why I'm not, because it makes some sense. So Phil has got a spread betting account. So Phil's...
Is it an actual one or a demo one?
Always take the number, take the two zeros off the last two numbers to get the dollar amount. Right, shall we ring that bell? There we go.
That wakes you up on a Monday morning.
Right, London Stock Exchange is off and running then. Oh, Scottish Mortgage Investment Trust making our job harder here. Up 35 basis points. What else jumps out to you, Beachy?
Well, there was the square root of nothing in terms of news this morning, wasn't there, really? So I don't think there's not the RNSs. Tesco reports this week, so that's the one to watch in terms of UK companies, actually, this week. Do keep an eye on that one. It's up a little bit for the supermarkets. Otherwise, ITV up 2%. Why is that? Why is that happening?
Let's see if we can get that up.
Consult the...
There we go,
the Oracle and find out why ITV is up 2%. I didn't see an upgrade this morning. Well, not for ITV anyway.
And WH Smith and their expensive Disco Crisps are cracking on, up 1.6%.
What are you whinging about Disco Crisps for?
Because I had to pay £2.40 for them.
£2.40. I like Discos, though. They're good, strong flavour.
And you probably get a free newspaper that you don't even want along with
6 bars of chocolate to go with it.
WPP, you mentioned there was a story there this morning.
The CEO has stepped down. So there's a change in leadership at the helm of WPP, which, of course, the advertising giant. That was Sir Martin Sorrell, of course, from years and years ago. But yes, the CEO's been there 30 years, and it's just, the share price is struggling, to say the least, and AI is having a very tough time of it, really. Absolutely.
I mean, that's a clear one where you think it would just get absolutely smashed to pieces by AI.
Yeah.
Rio Tinto, another one where the CEO left and it's done some damage. 43.80. We looked at that on Chart of the Week last week. I was shocked to see how low it was. That's one that's on the shopping list. I'll be looking to pick those up on further weakness. Whitbread, £28.50. Always on my shopping list.
Very solid company. I don't think I have the shares anymore. I think I used to really like Whitbread shares. Yeah. Always deliver the goods. Really.
And our good friend Jamie that comes in on the show as well. He's the expert there. And he's still got Whitbread. He was telling me as we were playing paddle on Friday. Whoa, I won my first ever paddle game.
Look at you.
Yes. First out of 6. Well, 5 losses, 1 win.
That's not a bad win rate.
But the best thing was I beat one of my best mates, Stuart Holt. smashed him to pieces. He started doing double faults that much. That's how stressed
How
he was.
annoyed he was. You're like that.
Yeah.
Let's see that chess champion last week that lost to the, is it a 15-year-old or something?
No.
Yeah, and he stamps the board and walks off. He's not happy. Not
Yes.
happy.
Right, so the miners doing all right there. Anglo American up 40 basis points, £22.28. And BHP up about the same. What about the losers? Chris Beecham, who is on the downside today at the London Stock Exchange.
Oh, so WPP, the biggest faller so far this morning, down 1.4%. Watches of Switzerland, another one of those that you often see are the most volatile, really. Often crops up in our movers and rises and fallers on the morning call email. So it's always one to, if you like volatility, there it is, but you might not, as an investor, probably not the main thing you want.
I should probably take it out of the list, actually, because it's not one that many people...
It's not a major popular one. And then it's just Carnival Cruises down 0.7%, BT 0.8%. So nothing huge, is it, this morning? Very much a very quiet start to the week.
Nothing huge. The most beautiful stock in the world, 73.3 pence. What are we saying about Vodafone this morning? Well, we are saying that the Times, yet again, questioning why investors are still so sceptical when the wonderful job that Margarita de Laval has done, and the Times, a whole big article talking about the potential upside in Vodafone.
So that's your day sorted, writing an angry letter to the Times. You're going to be disgusted of Kensington in the Times tomorrow then?
No, it's positive.
Is it positive?
Yeah,
it's investors still sceptical? Okay.
It's questioning investors' sanity.
Oh, right. Why are they ignoring? Okay. Not buying the Kool-Aid.
And investors remain skeptical because the company's share price is still close to its 30-year low. It's one of those ones when it starts moving, then, suddenly everybody at £1 will be saying, why haven't I got Vodafone? Why am I not involved?
Well, price is sentiment. This is the key thing, isn't it, really? People like a price that's in motion to the upside. And again, it will be, yes, if it does soar from here, it'll be, well, why didn't I buy it when it was down here? Well, because you didn't like the look of share price, you didn't believe the story, because they have sort of declared so much on a turnaround program so many times that when it finally happens, people go, now we've seen this movie before.
True. Sealing the 16.5 billion sterling merger with Three was a dream come true, Margarita de Laval says. And yes, she was at the conference last week. So that's the interest in the scoop on Vodafone this morning. But after that 2 pence dividend last week, it is back down to 73.40. I think I'm going to sell some more puts in that today. Maybe the 68s. See, I've managed to pick up 4 pence every quarter.
Okay.
So what's that? About 5%? Yeah, about 5% a quarter.
Something like
just from
that.
selling the puts. Then St James's Place, share price not showing the excitement of having US-China trade talks around its area this
No, but then a little bit. No one's really believing the excitement at the moment, are they? I suppose that's the problem. Tell me about Rio Tinto.
Yeah.
What makes you like Rio Tinto so much?
Well, so you'd be surprised.
Apart from the chunky yield you get, obviously you get about 7% in Rios at the moment.
Yeah.
So you can't not to be sniffed at, really.
And it's just literally they're digging cash out of the ground, and but you have to see that they've come off from that about £47 they've come off since the CEO departed, but I wouldn't buy them here necessarily.
Oh, okay. So but if you flag up the monthly, can you flag up the monthly for me? Sorry to make you do this.
There we go.
If you go since sort of 2020, every time they've got down to kind of about this, so purely from a chart perspective, the market's just gone, okay, we like them down at this level because they're cheap.
Yeah. All right,
so
Axel.
I know, but this is the key thing. It's that combination of fundamentals and the price action actually come into play, because it's defending an area, if you like, of price, and it's also people just saying, actually, okay, from the valuation perspective, it's not too demanding. And it's not been great. Clearly, 5-year performance is not trending higher.
Yeah, you've had some quite chunky dividends.
You are getting the dividend as well as the patience for holding it. So again, it's a bit like Vodafone, perhaps, if I dare utter sort of heresy in your hearing. that it's one of those things where
Right.
it does have that potential.
Yeah.
Clearly, and whatever it is forward earnings, but it's 8 times backward earnings.
Because if you look back, the reason that it motored up in 2019 was because of that disaster in Brazil.
Yeah.
The Valley Dam. And so if we have a look at iron ore, let's see if that has come down to that level where it was in 2019. And it kind of has, you see. Well, no, that was so 590. So another 15%. Iron ore is still 15% higher than where it was then. But it does very much follow this chart because,
But again, it's a share price that's given you, over the last 10 years or so, it's given you 18% annualized a year. And a lot of that is the dividend. But this isn't a sexy chip company. This is just it is a boring mining stock, but it's a great big mining stock. So it's delivering you very solid returns if we're looking at sort of the long-term investment performance argument.
Yeah. I'll take boring and 18% a year.
Yeah, exactly.
That's my dream.
Without too many of a whacking great dose of volatility in 2021. But apart from that, it isn't a crazy share price chart. So it's very much if you're looking for sensible stocks that do okay and deliver you quietly that kind of return, it's the kind of thing you're looking for.
Good. Right. That's a great point, actually. Just to go to the chat there, Neil pointing out to me that Disney, the IV rank is low at 9.8. Ooh, even worse at, about 9. So that is a really low. So volatility is at its low relative to where Disney volatility has been in the past. So that's a great point, Neil. I will step away from the screen this afternoon from selling those.
You just saved him there from making a silly mistake.
Yeah, exactly.
You can send him a check in the post later, can't you, for the money you would have spent?
Try to think of a Disney reference to that, but there's not really one, is there? The
He's a
dog
bit
wagging the tail.
Oh no.
The tail wagging the dog.
A bit like the mirror on the wall telling you who is the fairest.
And on the Vodafone options, yes, they are. They're large spreads, unfortunately, Neil, because of course it's a 75p stock. So, you're talking sort of 3.5 to 4.5p on the options. So that's big. Right, platinum. A few people are noticing platinum, and we've got a new plaything in London. So there it is, platinum up 4%. What is going on there? And there it is, that brand new stock on London Stock Exchange, Anglo-American Platinum, renamed Valterra, is off to the races.
There she goes. That's very impressive. It was last week we were talking about it, wasn't it? Was it last week we were talking about the demerger? So that was down at 2,700.
It came at
a bit more than that.
£29.50, and it's now 10% higher. But platinum's probably gone more than that. Maybe not. Maybe platinum has done about the same. Look at that, though. Platinum really.
Absolute surge. It's kind of diversification. Do you think it's diversification away from gold to an extent? People just looking for other stuff, other commodities, maybe?
Possibly.
The flows there.
Right, we're about to go into fast markets, and we are going to ask Chris Beecham his thoughts on the Nasdaq, as Cucumba has requested there. We'll also look more into platinum and the other plays possible. And we'll see you in a quick 2 minutes for fast markets.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app. And now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery, and I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees, with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Welcome back to Fast Markets. Let's look at the NASDAQ. Chris Beecham, what are your thoughts here?
What a fantastic run, honestly. But if you look at the earnings, let's look at the Mag 7 earnings, and they came in for Q1, 27% aggregate earnings growth for the Mag 7.
Year on year?
Yeah. That was, the expectations were about 16%. So absolutely
Really?
smashed expectations. So once
And that was
again,
Microsoft?
Yeah, Microsoft. And
Google did better?
yeah, only one of them, I think it was missed, really.
NVIDIA was better. Netflix was awesome. Yeah.
And still, it's just, again, disbelieving this rally. Apple is left out of it to an extent because it's really stuck in the middle.
Yeah.
Particularly. So the FT last week was about the Mag 7 and replaced Apple with Broadcom. I said they're perhaps better in terms of their performance.
Wow.
But so, it's still a fantastic run. Given the way this market is so we say oblivious to bad news, I'm sure you'd say oblivious, testing record highs again, just to get everybody nicely caught out there. Really, it's not that far away, is it? That was that.
So 22,200.
So we are 500
2%.
points, 2% away. So if it wants to do that, and a bit more good news, if CPI doesn't trouble everyone too much this week.
If Jensen puts up a good show.
Yeah, maybe. I think if you look, usually the second half of June isn't great for US stocks. On average, it's a bit weak. But again, it might just be weakness and an underlying trend. At the moment, this isn't a market that feels like it wants to go down particularly. So it needs a sort of ramp up in tariff arguments. I think tariffs are dead, essentially. I think they are a dead duck. The administration has
But then
shot its
so is
bolt
the
on
budget
this.
then.
Maybe, but then we're in a different world. So maybe...
What world are we in?
Well, we're in a world where...
Disneyland.
Well, exactly, where he goes and does his best to try and distract attention as much as possible from that. But I think they can trim
but the
this bit
bond
without getting
vigilantes-
this stimulus through.
They've got a grip of this now. They're not letting this go. You can see it. 30-year at 4.97. If tariffs are eradicated, then his deficit is back in full. That thing will go to 520.
But a lot of the worry, I think, about the US was that the adults weren't in charge. And I think they've looked over the precipice from the volatility in April and they said,
Get rid of Elon.
We don't need this. It's far too much effort. Look what it does to our poll ratings.
Yeah.
Let's hammer on the base of the sort of stuff that's going to keep us our votes strong in the midterms and not actually do anything. I think is how we're looking with the Nasdaq.
Yeah, because you don't want somebody like Elon around who's actually being disciplined and trying to stop America going bankrupt. You get rid of him.
Well, we can debate that one another time. But yeah, for the Nasdaq, yeah, it does not want to go down at the moment. I think you're standing in the way of a train. And it's still, if you look at the fund managers, they're still under. We should get the fund manager survey from Bank of America either this week or early next week.
The trend is
So that'd
still
be
your
interesting to see
friend.
whether they're still getting back into US stocks. Really.
British Aerospace. I mean, I was so wrong. Hands up, I was wrong on this one because I started fading this about the £16 level. And
Have we got the Axel clip for you at this point?
why would you short that?
Yeah, that one.
Why would
the
you want
trend
to
is your
short
friend?
that?
He's not. Anyway, BA, the Secretary General of NATO is saying that defence spending in NATO members should go to 5%, which I think is a bit excessive because the US is at 3.4.
Fantasy.
Where would you get 5% from? I don't know. But the base case is that defence spending in Europe is going up for the sustained future. It's not just the UK, but everybody else as well, bound to be good for BAE Systems. But you can argue there's a lot of good news pricing at the moment.
So there's a
definitely one to
theme
watch.
here, isn't there? The theme is, chart off, if we get rid of tariffs, you lose revenue for the US government. If you if you increase your spending on defence, then you're increasing the costs and you're taking the budget out of balance. What could you possibly do to get your budget back in balance? What could Rachel Reeves do that just with a click of a finger would give her 6 billion sterling at least?
Aside from raising taxes.
Aside from raising taxes.
Oh, I don't know. What could she do?
Well, Reform UK has told you this morning what she could do. She could stop this absurd policy to pay the banks interest on the money that the Bank of England created out of nothing. For once, I think they absolutely talk sense here. This is a disgrace that we, the taxpayers, are funding the profits of Lloyds, of Barclays, of NatWest, and Reform have got it spot on. So this is, of course, the process that the Bank of England pay interest on the overnight deposits by UK institutions. And much of the money that was there was part of the QE programme.
So how much a year is this? 7 billion?
30 billion.
30 billion a year?
30 billion a year we, the taxpayer, pay to the Bank of England to fund this. It's absolutely absurd. So, of course, you can't just take these things away completely because, you know, apparently that would hurt the UK economy because banks couldn't make as much profit. So banks would have to, therefore, increase their charges to retain the profit that they make. If I was going to swear on air this morning, that would be it. Then the other thing, which is the most bull hit argument that I've ever seen, excuse me, was from the Bank of England last week. Let me just find where this... They were asked about this in the Treasury Committee last week, and their argument was here. Chris Beecham, please read this paragraph for me, starting with a spokesman.
A spokesman for the Bank of England said, the governor set out the bank's views on this matter to the Treasury Select Committee. Bailey said paying the full interest rate encouraged mainstream banks to hold some of their reserves with the Bank of England, which has financial stability benefits.
And this next one here.
Any changes to interest payments, he argued, would incentivise banks to move their reserves away from the central bank and into UK government bonds, meaning any presumed benefit to the public purse from reducing interest payments in this way would be illusory.
That is utter nonsense. Banks would have to take their money out of the Bank of England, which they're getting free interest payment
5%
on,
or whatever,
that the taxpayer is giving to banks to aid their profits, and they'd have to buy UK government bonds with it. So therefore providing a service to the country of financing the UK debt that is already there. So they would take bond prices higher,
and
they would
yield
take
would go
interest
down, and then we'd pay less.
So the cost of everybody's mortgage would go down if they stopped doing this. It's absolutely absurd. So we fixed the budget. Rachel Reeves gets $6 billion in her pocket, and that's only from a tapered payment. So on the first X amount, the ECB already do that. So European Central Bank only pay interest on the first certain, they don't pay interest on the first certain amount, and then they pay interest after that.
Right.
If we do that, it saves us $6 billion a year. If we do away with it completely, it saves us 30
billion a year.
And to say that the only reason we don't do it is because the banks would have to buy gilts instead.
Doesn't really stack up, does it? Doesn't really stack up as an argument, does it?
If anything, it adds to the argument. So anyway, that's me on my soapbox this morning. It's not often I have a political view, but that is certainly one of them. The other news we didn't notice this morning is that Labour says that, Savills say that Labour will fall well short of their target for 1.5 million new homes. Chris, what do you think of the home builders here? Any view on UK home builders sector?
They have had a tough time of it. They've got two of them actually reporting this week, so that'll be interesting. You've got Bellway and one other reporting. So
Chart off, guys.
interesting one. It's not actually been, well, the demand has been better, I think, than people thought, and I think the UK economy is looking better than it has been. So they are not entirely beleaguered, shall we say.
Right.
But it's still a very tricky one. They're quite expensive at these levels, really. You look at Bellway, Persimmon.
So yeah, so there's
not
the Bellway
compelling.
chart.
Massively compelling, are they? Really?
No. It's tricky, isn't it? Is it red tape that's stopping them? Because I guess Labour was meant to be doing
yes, but the idea is it's supposed to slash all the regulation and get these homes built because we need the space, and it still isn't matching up to expectation, is it really? It's Angela Rayner's target, wasn't it? And she's just not delivering, really.
Yep. And then we see the story last week, which was interesting for British Land. All the companies that own the shopping centres. So last week there was the story that landlords of shopping centres had a deal with insurance companies.
Right.
And you basically had to buy your insurance for the shop through an insurance company. But the landlord was receiving commissions from the insurance company for making you pay the insurance. So the court said, no,
you can't do that, no.
So, and I mean, I don't know if British Land is on the hook for this, but it was owners of the shopping centres that were potentially on the hook. So I thought that was an interesting one.
It is interesting.
Any other top picks in the UK at the moment?
In the UK?
For the new highs that this mighty FTSE is about to see.
Isn't it? Gosh, what else could you have really in the FTSE? I don't know. Well, I just like, the long-term performers. You've got Next. They continue to deliver the goods. They do really well. See, it's hard to be excited by the FTSE 100, isn't it, really? It's not an index that grabs your attention, is it? In the short term, anyway. Sorry about that. What would you pick?
Sorry, I'm just looking at Monkey Man and Bigger Beers have both said ONDS. What's that? Sorry, ONDS. The drones. ONDS.
Ondas Holdings.
No, it can't be Ondas. That's only at 1.7. Is it? If you guys mean Ondas, then let me know. And then yeah, Palantir, we saw. I managed to. This stock was killed on Thursday and managed to bounce back a little bit on Friday. So you saw we had a huge drop there. So I did manage to cover some of my short calls on there, but I'm still. Let's see, show you the tasty portfolio there. So, yeah, I'm still short the Palantir 160 calls for August. But what was the one I was short of? Let me see. Activity. Yeah, Palantir 150 call. I was short the July 150 calls. I bought them back on Friday. Yeah, Ondas Holdings. Ondas Holdings. I had, sorry guys, I actually don't know about that.
That's a new one on me. Drone tech. Okay. So anything with drones in it, obviously at the moment, you've got Ukrainians doing remarkable things with drones against the Russians. So it is the buzzword in military spending at the moment, isn't it? Drones.
Yeah.
Everything's drones this, drones that. How are they going to change warfare? So,
sounds like we should get Monkey Man on Fast Markets for a bit of chat about this then.
That's a hell of a roller coaster ride in the share price. That's the exact opposite of what we're saying with Rio Tinto, and a boring share price that just steadily rallies. And there you've got Ondas that's...
God, they're right. It's up 70% in a couple of weeks.
Yeah.
Are you in that, Monkey Man? Let us know. And Bigger Bees. That's an interesting one. That is. Okay, great. Right, chart off. Let's see what else is moving. We've got a Smarter Web Company up 4%. So that's yeah, small. What was it? It was 81. They raised that last week. So you've got, that's about 5% higher. Most of that coming this morning. Let's see. Director shareholding there, but yeah, no announcement this morning. So Smarter Web back at 84.85, and let's have a final look at. We didn't look at European stocks this morning, which we'll apologise for that. We'll do that shortly. Nothing new coming in at the top leaderboard, legal board, because legal in general are on it.
There you go.
258. That's near the highs again.
Good old move there.
Diageo languishing, and yeah, the through W.H. Smith. So no changes there. But in Europe, we have Puma at the top of the leaderboard, up 90 basis points. Renault up 80, and on the low side, Societe Generale, ASML, and Stellantis. Oh dear, Monkey Man emailed me about that before it went up 70%.
Oh, well. Shucks.
I've had a shocker there, haven't I?
Yeah.
Oh, dear. I might just send Monkey Man my portfolio. He can just have a good tap around. Good stuff. Right. That's us. Matt Arbour is here. He's ready to come in. And Angeline is going to grill him on what to look at with regards to NVIDIA. With NVIDIA in London this very day. Jensen Wang, I might go and try and get a bit of a selfie with him.
Get him to sign you. No.
On that, Chris Vito, thank you very much for joining us. Yeah, if only we had a Discord, Monkey Man could have popped that into back on April the 16th, eh, Producer Phil? See you after the break.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Hey, trader friends, welcome back to the show with myself and Matt Alba.
How are you?
How was your weekend?
Yeah, fairly quiet. Nice sunny weekend though.
Yeah, very good for the plants. Some of the plants needed that rain as well. I have to say that it was quite nice to kind of like jump in and out and doing some of that. Some of the checking on my sources to find out, if there was any heads up as to what was going to happen today in terms of those talks, where it's going to take place, that kind of stuff.
And did you get any joy? Your sources following?
For the security risk, they kind of it's really, really difficult. Even for them, it's hard to decipher. But the smart money is kind of like, where are these spaces in London? And only a few where they have secure locations, underground entrances, and secret rooms, right? There are only that many people, and we all know that the Chinese delegation don't want to be too far from Chinatown, so that decreases that circle even more. So that's all I'm going to say on that, because of course security is the most important thing. Speaking of which, these negotiations taking place between the US and China, still going to be like seen talking the talk, or do you expect anything concrete to come out of this?
Concrete, no. I think the Chinese keep their counsel as ever. Let the US do say what they want to say and sit back, resume the passive role, not rising to things as they've played a very good hand so far. Yeah,
we've also seen them dial back any of these talks and just saying the door remains open. Trader friends, for those of you, just an update if you are just coming into the show right now as to what the latest state of play is. The truce still in place between the US and China. Both sides having these strategic talks and tariff talks today here in London. No one knows where the location is, but the expectations is they're going to try and address some of these fundamental issues, structural concerns, including intellectual property rights, other than the tariffs. The only thing that we know right now is that we still have this truce, right, between the two of them, the two sides, which gives them more space for these negotiations, including this avoidance of tariff escalation, but nothing concrete so far.
Equally as interesting is does the truce between Trump and Musk persist?
Exactly.
Which is, you know, drawing a parallel that we have more information on, or which provided all the entertainment last week and lots
continues.
of trading activity, and obviously continues.
Yeah. Did you see the latest article about how Trump said, you know, the friendship is over?
It's
over. And reports of pushing and shoving and fist fight even.
Well, it's comedy, isn't it? This is, you know, it's school playground stuff.
Yeah, just live on a world scale.
Yeah. But the moves we saw in Tesla, sort of Thursday to Friday, I'm still confused, because it's been this narrative as to Trump, Musk being in the White House was either really good for Tesla, or then when he said he was going to leave, that was really good for Tesla, and then he does leave and it was really bad for Tesla. I'm still really confused as to what the actual play is. Between the relationship, but it's certainly driving some volatility and a lot of intraday opportunities.
Yeah, definitely. Take a look at that chart. I'm just showing you because Matt squeezed in a very early pun there. Driving.
Yeah,
I heard that.
Wasn't as good as Beecham's drones and buzz, but there we go. He didn't play on that.
Yeah, he did. Yeah, but not bad though for 8:39 on a Monday morning. So as you can see, there are loads of volatility, as you heard from Matt just now. This is the hourly chart for you, just to show you what we mean. And also, we saw that space of interest, I told you about that last week, failed to break through. And there we have it. It did progress lower there. And no surprises. Those of you that trade Tesla here, that amidst all that talk of the cracks in the bromance, that is not going to play out well in the short term for the stock there, because you know, there are now serious concerns that this is not if this is not just something that has been pre-agreed between the two, it could get really ugly.
Well, exactly, especially where there's the whole structural problems that Tesla has. Sales are not improving, and the march of the Southeast Asian Chinese EV manufacturers coming in and stealing their lunch.
Yeah. I drove a Polestar, test drove a Polestar. This is my latest.
Always like to get on what has been driving this weekend.
Latest, yeah, Defender last weekend, and then now the Polestar, because I'm still searching for that car. It's like finding the perfect man. Still haven't found, well. Isn't that a song? But there is a reason why I'm talking about Polestar. Polestar is owned, partly owned by Geely.
Yep.
And there was great talk about, you know, and you can take a look at Geely, I believe. There we are. I'm going to whack that up right now. And as you can see there, I'm going to put up the daily chart here, trader friends. Geely has had that real kind of march up from the April period, but then hit that sort of top there during May. And if you go back further, it has fallen a huge amount, but it is on the medium term heading higher. It's grinding higher, right? And the reason why I'm bringing this up is because they have this big stake in Polestar. I don't know whether you're aware.
Polestar was a Scandinavian.
Yes, it's a Volvo.
Yes, it's a Volvo in disguise. I thought it was.
Now, the point I'm making here is that it's always going to be well supported. Because this is why it's important when trading something to understand the real story, is that it is kind of its joker card. If tariffs get ugly, Geely can still build these cars along with Volvo without having to get caught up by the tariffs. Yep. Because where are the places where they build this? Scandinavia, Netherlands. Yeah. So it's not going to get caught. So hence why I'm showing you this. S&P 500, now that we've spoken about Tesla, and that motoring low, lots of volatility. Let's try and put up the S&P 500. Guys, can we bring me up on camera, because my connection is not great there. As you can see, my Wi-Fi's gone down.
Wi-Fi's gone down.
Let's talk about,
500
yes.
continues to crawl higher, doesn't it? A little decent bounce after the jobs number on Friday. Yeah, it's we're back towards the 6,000. It's quite remarkable, isn't it?
It is very remarkable
how quickly we've got back towards 6,000 on the S&P. It's you can't keep the US market down, seemingly.
Yeah, and we had this discussion with Tasty as well recently, and Dylan and Tom Sosnoff were talking about this. And you know what Tom's view is, what this suggests is that actually markets don't care. They're discounting the squabble between the two. They're looking ahead into the, what is AI going to bring for the future? What is, the advances in technology and servers and, microchips, what this is going to be. And they're just ignoring the tit for tat or the, fist fighting.
Well, I think as much as it's ignoring it's just suggesting that demand continues in the US and that the US economy is resilient. I think that's as much as everyone likes to talk about AI stories. And,
as much as everyone's talking about the end of US exceptionalism that we hear so much about.
It's where the rest of the world still have an appetite to put their money into dollar-denominated assets and US equities. I suppose that's sort of the edge of the story that might play. There's been whispers of taxes on foreign investments coming to the States as a whatever means to pay for big beautiful bills. So that's an easy way, isn't it? Put a small transaction tax on foreign investors. Do you think the market can stand that? I think it's an odd one to play, but I've heard that discussed out there that this is a quick revenue raise. If people want access to US capital markets, they can pay a tariff.
Yeah, totally. It's one way of doing it, right? It's a tax and.
Well, let's not forget you pay stamp duty in the UK, don't you? So it's the it's not a crazy thought.
Not a crazy concept. Yeah. So let's take a look at technicals on that crazy thought. S&P 500. Taking a look at the white line that I've drawn for you there. It's still looking bullish. This is still looking bullish, trader friends, and this is also confirmed by, I'm going to whack up the moving averages here, if I may, and you can easily do that yourself by just going to the menu bar and then hitting up moving average there. As you can see there, it's still well above the 20, the 50, and the 100, which implies strong bullish momentum still. Now, I've also got the RSI to hand here. Do you ever look at the RSI? Matt,
no.
Safe Harbor?
No, I don't.
You can say no, it's okay.
I don't.
This is a discussion.
I've been here before. I'm not a big fan of the technicals.
I know, which is why I want to put this bar past you, because I want you to poke holes in it.
Much as I love a hindsight trade, that's just, technicals are.
I love this because it gives
backwards looking.
I like having someone try and poke my theories, because then it means I think about this with more clarity and I check my theories, right? So we did see another bullish indication. We did get past that 6,000 mark again.
We did the psychological 6,000.
Yeah.
Technical traders love a whole number.
Oh, yes.
Everyone loves a whole number, don't they?
Oh, it's magnetic,
But
some say.
It is true. It is true. Always. I remember, back in the day, oil at 100, where it danced around, wouldn't touch 100. As soon as you touch 100, you go through. I suppose more recent times, it was Bitcoin at 100,000, which became an inevitability once you became close. It was almost that kudos of being the person to hit 100,000 on Bitcoin, even though what's the kudos in paying the most for something that's ever been paid? I don't know. Kind of a billionaire poker game, but
yeah. And speaking of some of these trading strategies, obviously your time frame makes a huge difference, right? So someone's asking me, how about a short-term trading strategy for the S&P 500? Given we've got all those events coming up this week. We haven't even got to Jensen yet. Oh my goodness me. So the buyers here, in my humble opinion, this is not trading advice, overall bullish. You can consider buying dips near the 5,850 level. I mean, that's kind of like the support zone here. And we saw that around the end of May as well. So an area of interest is around there. Look for moves above the 6,000 mark initially, and if we have crossed that. So I'm looking for a bounce off that yellow line to continue up towards the levels last seen in February. So that is the short term. If you have a bullish sort of view, short-term bullish view on this, expect some volatility. Obviously, it can be really choppy given what's happening this week. Jensen. Yeah.
Jensen meeting some really high-profile people this week.
Oh my goodness. Just a note earlier this morning.
There's the kind of poll that people like, isn't it?
Oh my goodness, is Trader Friends, Bigger Beers earlier said, how about IG Trader Friends? I need to get royalties from that because I call all of our loyal viewers Trader Friends.
Trader Friends.
Yeah, I deserve loyalties there. What are the other names? Let's show them up on the poll. They're getting it up now. Producer Phil's getting up there.
There we go. Only time will tell. Who's catchphrase?
Come on, IG Trader Friends. Let's make this one happen because this is one for you, guys. And girls, this is all for you. We are doing the show. If you hit the like and subscribe button. It was a milestone last week. Issa was on with me and we said hit the like and subscribe button. We crossed the 900 organic number of viewers, and we're hoping to get to 1,000 this week. Have you hit like and subscribe?
I have.
No pressure. So Jensen is here, of course, and poor him. He's going to have to meet reportedly Kia
with his leather jacket on.
Yes, with his leather jacket on.
Good.
Goodness knows what Starmer is going to say to him, because I'd love to be a fly on that wall. But really, it's the whole kind of tech. I know what Starmer's going to say.
Of course, the UK are great for AI because they're keen to push through legislation that gives away all our creative protections.
Yes, so, yes, and of course Apple.
World leaders in giving away your copyright advantage.
But also, didn't the UK say to Apple they couldn't stop, any requests for data and
Yes. Yeah.
The expectation was this was going to lead to every other WhatsApp, Teams, right? The floodgates have opened.
Yeah. It's interesting stance with Europe as a whole with anyone in America big tech, I suppose. NVIDIA would class themselves slightly different in that they're doing the hardware rather than the software. So it's you come in with the premise of building things and data centers and the like, which governments fairly soft for governments rather than talking about IP and things that affect consumers.
Jensen Huang reportedly quoted, I believe, on one of the big media channels saying that it's not AI that will displace your job, it's whoever is better at using AI than you. I mean, bit of cold comfort there for the weekend. I think that was, I read that over the weekend.
Sort of puts into an interesting doom loop if educationalists are leaning more heavily on AI, whereas actually the better way of using AI is to have better language yourself. So the language is what controls the large language.
Yes.
So it's how to structure your search. So by not being fed back by AI how to do that, you'll beat AI. So in the long run, I'm saying it's a return to good old-fashioned educational values and to learn how to prompt your chatbot.
Yes, to ask the clever
questions. Exactly.
So then after that, he's going to also to Paris for the Viva Tech, I believe, and also meet a whole load of Germans, right? Olaf and gang to figure out. believe he wants to open a big presence there. No one.
Well, I assume the game is to see who would give him the most subsidies to build something. That's what you do, isn't it?
Yeah, and then decide on what to build.
But you probably, unfortunately, as everyone, surely perceives, it comes down to where energy is the cheapest. You don't build data centres unless you've got a source of cheap energy on tap. And that's probably not going to be in the UK,
Nope.
unless I suppose you could build it in Scotland next to a wind farm and build your own interconnects. But
yeah, and then piss off a lot more people who don't want all these wind farms everywhere. Yeah, I think it's going to have to be cheap energy in Germany, because the only other place I was thinking that he should have gone is some place that has a lot of hydro, power, which is again cheap energy, but also cooling.
Well, again, yes, you go to Scandinavia, don't you?
Cooling, yeah, Scandinavia. Hear a lot about servers that are actually under ice and under areas that are very cold to cool these servers down. But let's take a look at NVIDIA. I've left the moving averages up. This is the daily chart, trader friends, and we are seeing at 142.
Yeah, it's kind of quietened down a bit, hasn't it, NVIDIA?
Yeah. I mean, look at that.
Yeah, it's after those sort of the shocks and the high volatility. Surprising post results that we saw there were some results and then a retracement. Which hasn't really been the case previously on NVIDIA results, where it's continued to trend in the direction following the results, but kind of regained its footing last week, NVIDIA, and crawling back higher.
Yeah, and it's crawling back higher. And what I am interested in is I'm going to put this perforated line there, because that is the critical level that I'm looking at. Around that line, if we break above that, this could indicate a stronger upward trend. That I've based on that high mid-February, as you can see there, and we saw again that this price action, NVIDIA had difficulty breaching that level back in February.
Not a whole number level.
Fell down. No, it's not. It's just looking at where resistance is. And then if we break above that, trader friends, then the next overhead resistance and target will be around the 150 mark. And that, you're going to go, hey, and have you just plucked that from the air? No, it's not plucked from the air, because all this is logical thinking. The last level, the last high prior to that February high is the 24th of January high. Okay, and so this also ties in, if you like, channel tops and things like that. In a bullish scenario, you might say, oh, I think Jensen is going to do great things with his leather jacket. He's going to get all the subsidies he wants, from Germany. He's going to build big. He's going to convince the UK to cut a deal. And just like how the Chinese officials are hoping that the UK is going to let them build near the Tower of London. You heard about that, right?
Yes, yeah.
We want the embassy.
Well, the embassy. Well, it's
Yeah.
Depends what the architecture looks like, doesn't it?
Whether it blocks the whole Tower of London. But back to NVIDIA, right? If you think, oh, this is going to go really well, by the end of this week, we're going to see NVIDIA really bullish. Then we are I'm looking to see that it breaks that level that we last saw in February, that around 142, and then targeting that 150 range level. Bearish scenario, we fail, Matt, to get above that level. Do you have a key level that you're looking for?
I don't have a key level I'm looking. I just find it interesting how volatility's dropped a fair amount on NVIDIA, sort of apropos to other things in the sector. Like we've seen, Palantir has been having some really sharp intraday moves, and without a lot of direct news there, whereas NVIDIA's been sort of quite slow and steady. It's not been the stock for intraday trading for the past week and a half. All concentration has been on the Teslas, the Palantirs, of course, your other smaller AIs, and I suppose you got your Circle AI coming in there with the IPO and a huge pop there. But it's back as sort of the boring stock in the sector.
Yeah, totally. And Palantir is a good one to watch. We'll look at that next because I know some of you asked for that. And just very quickly, if you don't break above that level and you think, oh, it's going to be bearish, it's all going to go Pete Tong for Jensen. I'm just showing you where the points of interest 129 there, as you can see, drawing that because of the bottoms reached around December and also January, and of course in May. Right, we have to leave it there because producer Phil is getting annoyed and about to come in with a crook. But Matt,
coming with a crook. Rich back on. No. Oh dear.
Thank you so much for being on with us. Always a pleasure. We have tons more. We've got Philly back with how to invest, and she's going to take apart Rich McDonald's portfolio. So stay with us for that. We've got all sessions before that too.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Hey, trader friends, welcome back. We are in the countdown to all sessions, and it is now time to go, everyone. Hey, right, let's have a look at where we're at, because it is off to the races there. And just checking in on and making that bigger so you can see that. IonQ out the gate with up 3% there. JD.com as well, up almost 3%. We know that the Chinese and the US delegates are in town to talk about trade and all sorts of things, including, tariff reductions, possibly, reportedly, an establishment of some sort of trade consultation mechanism. So watching Chinese-related stocks there. Lyft also up 2.7%. Some of the names are on the winners list, including Hims and Hers, Monkey Man. That is up 1% there. RSAX, I know you like Hims and Hers as well. I have a slightly bullish bias on Hims and Hers just because of its growth trajectory and what it's been doing here in Europe. iShares Upstart also here on the winners list. Let's have a look at the losers right now, if we may. Cucumber, good morning, or Cucumber is always right. Welcome to the show. I didn't see you earlier. Bigger Beer is saying, I've been using Wise for international transfers between accounts. Wow, we'll talk about that later because Wise is huge in Asia. Let's have a look at the losers list now that we've got that shaking out. We've got Carvana there, down almost 1%. NIO, which is on the higher end of the Chinese EV space, When I say higher end, I mean the premium space, unaffordable to the Ange budget. Down 0.5% there. And McDonald's also down 0.75%. Reddit, Trader friends, those of you that have been asking for Discord and everything, well, Reddit down 0.33% there. Taking a look at some of the other losers there, it's pretty much a risk on day though. So really it's the big movers there, JD.com, IonQ as well on the winners list there. Just checking in on some of these stocks. Some of you are asking me earlier on, what are you looking at this week? And well, we went across the board yesterday with Matt, Arbor, NVIDIA, one of the big ones this week, of course, because Jensen is here with his very swanky leather jacket to talk to the UK. Then he's going to go to Germany and then to Paris as well. To try and cut some deals there. Plenty in this space this week. Those of you going to the Viva Tech conference in Paris, I really envy you. I will be here holding the fort. But I have a short-term bullish view on NVIDIA. I mean, this is one that could keep giving. You saw there the RSI, still not in overbought territory. We have seen this swing back higher. Amongst all the tech stocks, really, mega caps as well, and NVIDIA fast approaching that critical level February 19th there. And we break past that, potentially we climb back towards that 149, 150 space last seen January, last peaked here in January 2024. Going across the rest of Europe, it is pretty much a risk off day here in Europe at the moment. FTSE pretty much flat. Germany is down 0.33% there. Let's have a look at that for you. We have, though, to be fair, we have seen a huge rally there since the beginning of April. And this is something that is pretty normal for technicians to see, where after a big climb, it then starts to plateau. So this is only healthy, people. It is still above the moving averages there. So that has to be noted. So we could see further upside because the trend is your friend, as Axel likes saying, and we are still seeing a bullish view there. However, it's important to note that the momentum is slowing. Any questions out there, trader friends, please slam it here. Hit the like and subscribe button. Producer Phil, what number are we trying to get to this week? 1,000. So help us get to 1,000. I think it was Steve Davies last week that helped us and said, you guys, hit the like and subscribe button if you like this and want this to continue. Some of you have also asked me, and what is a key space to look for? If you come off my chart, just keep me on cam whilst I find it for you. Otherwise, I'll have Phil saying F9, F11. FN, F11. Okay, so some of you have asked me, hey, and we use the trading calendar here on the IG platform. So I'm just going to show that to you. You can whack up my screen after I put FN, F11 on. Here we are. Here you go. Wait, do I get a round of applause? And some of you said, hey, and I use this economic calendar here, but are there any others that you use which you find useful and you like to show us, please? Yes, we're always here to help because I know that some of you want to be a bit more granular. I know that there are loads of experienced traders out there and you guys trade across different time zones, and some of you don't have to sleep and message me at ungodly hours. Well done you. I need my sleep, but I can answer that question if you just come off my chart again and I will get to the right page for you. You can go to, and this you will have to see me search for this. So you go up to, this is why I can't hit F9, F11, otherwise they can't see me searching for this. You go to Bloomberg and just search economic calendar. Here you will find economic calendar that I find particularly useful. Not that I'm biased in any way because I've worked at Bloomberg before, but one thing they do well is processes. And so on the left-hand side, please tell me if you use this. I'd love to know. Because back in the day, if I'm looking out for heads up on like, China data or anything like that, you can filter it, see, on the left-hand side. And you can also structure this so that it remembers your setting. So for example, I only wanted Eurozone. You can just click out of all of that and then head into your apply button. You can go to the right-hand side and have the weekly view, or it may be that, Steve or Monkey Man or RSAX, you wanted to just look at Tuesday, right? So you can also hit that. Always hit apply. You can change the time zone as well. If you are like Jesse 14 in Germany, or you are like away with numbers, Neil, somewhere else, or you're on holiday. But you can actually, structure this for any market you want to trade in. And this is very good for those of you that trade macro data. Right, on that note, we've got Philly coming up next to take a look at Rich's portfolio and advise him on how to invest better. So she is coming in right after this. Don't go away. Go and grab your coffee, get your toast or your cereals, and come back on because they're just about to join us.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. And welcome back. I am very happy to welcome Philly back onto the show for the second time now.
Thank you.
It is wonderful to have you back on. You're looking a little bit tanned there. You've been away?
Yes, just got back from Turkey.
Ah, nice. On the beach or Istanbul?
On the beach, yes, with two small children. There's a lot of water park slides.
Of
sort
course.
And my husband. Yeah.
Lovely. Well, last time we had a really good conversation about your background, which of course was in wealth management, and then you've gone out yourself and started your own business. And just remind everybody what line you're going down, as well as being on TikTok with, that's how we first met. What else does that consist of?
Yeah, so it's really still teaching people about investing and getting them empowered to do the investing themselves, but also now thinking about that mindset element as well, and what stories you're telling yourself that might actually hold you back from building wealth. I found most people I'd speak to didn't just want the investing, that there's more around it that you need. And so actually with this coaching piece, you aren't telling someone what to do, you're actually giving them the tools. But it's not just about the knowledge of what to do with your money, it's actually then the mindset element around it as well. We're all telling ourselves narratives all the time, so it's combining the two.
Because I think if you're not at some kind of calm with yourself over your general financial situation, then that's not a great building block to start investing from.
No, absolutely not. And if you are set in a state where you need to stay safe and thinking about that financial security, for most people, they see investing as risky. It's sort of almost like everything's the same. Whereas, you've got completely different levels of risk in different investments. And it's just really getting that message across, making people feel confident that it can be for them, and then the best ways to go about it.
And that's not just women, it is some men as well, isn't it? But it does seem to be predominantly the problem and more common in women, perhaps just because of the last 100 years or so.
Well, I mean, we could only get a mortgage and a bank account sort of 50 years ago. It's been so recent that women had any power to even choose what to do with their money. So I think that's still the case in a lot of sort of marketing, and a lot of the language used, it's still quite restricted. So that's why I always try and sort of talk to women as well as men. But when I do help men, it tends to be ones where they come from a background where there was no high earners in the family, and now almost as adults, they don't feel comfortable to ask anyone. It's almost a bit embarrassing. So it's quite a nice. I like that as well, because it's that's mindset, it's knowledge, and so it's interesting as well.
And so, what kind of conversation do you have when you're just starting off with a client? Then maybe we can even do a role play.
Yeah, sure,
oh,
sure.
Oh, I don't know what I'm signing up for here. Right.
Well, we always start with sort of the things you heard growing up.
Mm-hmm.
So I might sort of say to you, when you're thinking about money, what do you think it is? Money is, how would you finish that sentence to you? What is money?
Money is, a means to get things in life to make you more comfortable, I would say. So I think of, your general initial payments that go out, bills, and that we've all got. But what on top of that can help you lead a more comfortable life? And that's because my mum and dad both came from council, kind of housing, as many are up in Scotland. And my dad worked up his own accountancy business, and my mother was in nursing and hairdressing. And so, a lot of their income was going towards just bills. But then as my dad's business got bigger and bigger, then, that luckily allowed my mum to take some time off and bring us up.
Great. So even just hearing that about level of comfort, that's sort of positive language.
Yeah.
But I often will then scan for, is there something, sometimes someone will say a negative word as well as a positive word, so they can almost see the potential for something positive, but perhaps there's also even the idea of comfort is is something, but it's not saying, you know, it's abundant, it's infinite, it's, you know, allowing you to take over the world. Not that you need to take over the world, but it's just looking at what messages you're sending yourself. And actually, if you've experienced that sort of seeing, going from just paying the bills to there being a little bit extra, that's great that you've already seen that sort of slight possibility of what is possible. But yeah, so I'd start off really thinking about, you know, what phrases you hear growing up, what are those narratives you're telling yourself which might potentially limit how you are as an adult with your money, or you know, sometimes there is already an abundance. Like I work with some business owners where they may have come from a background which was struggling, but they now just are in such a strong position that they think, right, I've just got to make the next, you know, large amount, and they just do it, and it's determination, and it's a different mindset. So it's just acknowledging where you are.
It is funny, a lot of my friends and I discuss, looking back to when we were in our mid-20s, that we weren't earning a great amount, but life did seem easier. And now you get to a point in this part of your career when, you know, you're meant to be sort of built up your salary or your compensation, but it doesn't seem like there's the headroom that there should be.
Well, that's the classic lifestyle creep, isn't it? It's where you get the pay rise and then things just gradually get more expensive. You're probably not still paying the same rent that you paid when you were 22.
True.
You know, things have also gone up, you know, in terms of cost, perhaps not as much as the 45% inflation in Turkey. Their interest rates are 45%. And I was speaking to a financial professor last week randomly in the hotel.
Yeah, as you did.
45%. So, you know, she was saying that their salaries are going up to cover those costs, but they're not getting any richer because things have gone up in price. But obviously on a much smaller scale here, things cost more, you know, you ask. But I think it's that lifestyle creep, and also perhaps, you know, you get a mortgage instead of rent, perhaps you have children and there are childcare costs. You know, there are different things that do add on top. And if you don't get disciplined to start paying yourself first, you know, with your salary increase, can you know, siphon a bit away so you don't feel the increase of the new salary, so that you can actually start benefiting.
And that's the, you know, the kind of thing that you help with, because with the coaching, you can make people aware of what the options are. In fact, we've got a question on the chat here: when's the best time to start a pension for your children? And that is one way of you just squirreling a bit away each month. As well as that, what are the other options?
But that's, I think some people are keen on pensions for children, often because they don't want to put money into the junior ISA because they're scared that the child will get the money at 18 and not be sensible with it. But part of what I do, and I talk to parents a lot to sort of help about how can you actually educate your children up to the age of 18, so that when it gets to 18, they're empowered to maybe spend something on something fun and enjoyable, but actually some of it stays invested and carries on growing. You know, that's why a lot of people used to put money into trusts so that they could get it at 25. They thought they'd be more sensible. But I think, you know, you can put in from when your children were born into a pension. It's just that you probably won't see them enjoy it. By the time they're late 50s, you'd hope that you can help them sort of sooner than that. And that's why I personally put into junior ISAs for my children as opposed to a pension. Maybe I will do that in due course, but I think great to start with a pension early for people, but I think the junior ISA, you can help them sooner.
And straight from, you know, 30 days after they're born kind of thing.
I had a client who was an accountant, and when he had his 5th child, it was at the end of March, and we managed to get his junior ISA open. just to get that allowance. But I mean, the fact that it's now 9,000 for children, you know, if you've got a family of 4, you know, 2 adults, 2 children, it's a lot of money you're putting in, which most people in the UK cannot do. So I think I always say, even if it's a small amount, you know, it can be, and it doesn't have to be regular, actually. I know people do talk about investing regularly, but if you can put even a small amount aside into either the pension or the junior ISA, you know, it has time to grow. So
great. I am on at them here at IG to get that junior ISA as an option for people, because
it'd be a good idea.
It's great, isn't it? And then, so we've got past that point then. Okay, I'm earning the salary that would have seemed like a dream when I was in my mid-20s.
Yeah.
But I still don't have the discipline to know when the check comes through, you've paid your bills.
Yeah.
What do I do with that little bit that's left over?
Well, that's where you're thinking about what do you need in the short term that has to stay as cash, medium term, and then long term. So it's really getting clear on what matters to you.
Yeah.
When do you actually want to achieve those things by? And then if there is something that's longer term, could you put that aside to invest? And then that is that regular putting it aside. And if there's 1 month where you pause the direct debit, that's fine. But it's getting it so it's automated and you're not having to think about it.
And it's habit, and it's negotiable, but not unless there's a good reason.
And it's not checking it all the time, because I think that's where you don't do so well.
Yeah.
I think you want to just invest, keep going with it, and check in that it's sort of in line with what you want.
Okay. And generally, do your clients fill up their ISA first of all, and then, after that, are there obvious routes to go down, or is there options?
I think it will definitely depend on the person's individual situation, and I don't give advice on it. I just explore the options for them. But it's definitely thinking about the different diversification, the different tax things. What are they putting into their pension? What's going to optimise their situation?
Yeah.
And then that balance between the money today versus in the future.
Yeah. And then
tax isn't the enemy. I also think that, having money in a general investment account, you're still investing. It still has room to grow. It shouldn't be that you fill up the ISA and then that's it for investing. One of my best clients sort of really celebrates the wins and takes the profit. Sort of almost celebrates the tax, the CGT, and I think that's he tries to balance it, but now the allowance is so small. But I just think those sorts of things is actually approaching it positively, that this is a winner and we're now trimming it.
Maybe you'll have to have a discussion about spread betting at some point with one of your clients. Now, what about the cash ISA situation? What's your feeling on that? Because personally, I don't really understand why cash ISAs exist. But yeah.
Well, for some people, if they've got something they know that they've got cash set aside for, and you're either a higher rate or additional rate taxpayer where you've got so little interest you can make before you have to pay tax on it, then the cash ISA can be a nice place to park it. If you're setting money aside for buying a property, that can be tens of thousands.
Yeah.
Low hundreds, it can be a sort of substantial amount of money that actually now is generating with a 4% interest rate quite a lot of interest. So it can be a temporary place, as in I say temporary, sort of maybe in the 2-year time frame. So I think as stocks and shares ISA, that's what I use because that's where I'm at my stage at the moment. But I think for some people it's where they want to put their money.
But if a stocks and shares ISA offers interest on the cash,
oh yes,
in that, then
and there's some good rates out there as well with those. So I think if it does get reduced the amount you can put in, there are ways around it. I mean, cash in a stocks and shares ISA is usually there to be deployed, isn't it? But if it can earn interest while it waits, then that could be a good workaround. I do wonder who has been advising the government on this cash ISA thing, because I don't think, I speak to so many people, men and women, who are not investing. And it's not because they're restricted. If they get restricted on the ISA front, that doesn't mean they're going to make them invest. We need to sort of educate on the investing piece.
There needs to be a huge national education on the potential for investing, and
I'm not saying just for the UK. I mean, that would also be, let's not restrict people.
Let's start with the UK first. Just because
not for education. I mean for restricting it to just UK investments.
Right.
Because they were talking about that as well. Do you remember they talked about that extra 5,000 in UK investments? I just think let's just stick to letting people know what a sort of diversified portfolio looks like. Let's show them actually, yes, that can go down, it can go up, but also what's the risk of not investing, keeping your money as cash.
And then we saw, I assume, 6 weeks ago, 2 months ago, a lot of people would have looked at their investment account and been horrified that suddenly 20% has just disappeared completely. And it's a big number, isn't it? Because there must be a phrase for you always set your expectations on the highest it's been. And you don't think, oh, I've made 25% and 26% in the last 2 years. It's probably about time, it gave some of it back. Then it did give 20% back.
Yeah.
Did any of your clients, oh, I wish I'd sold, I wish I'd moved some of it into cash? Was there much of it?
I think because some of them are newer to investing, that was a little bit of a shock because they were getting going and there were some real swings. But by doing nothing and actually letting things recover quite quickly, you might think now is how much further is it going to go for the time being. But yes, I think part of what I do is that sort of psychological side of we do get downs as well as ups, and it's only a loss if you sell. So it's that crystallizing it that it doesn't look nice when you see it go in the red.
Yeah.
But actually that people are only investing if they're long-term investors, if they can afford to lose it, if it's not needed for something in the short term. And I think with that in mind, it's never a nice feeling to see, but actually they have that information and knowing actually that for some people, they can now put more in and see how it grows over time.
That's it. Yeah. Is it about having a little bit of a pot on the side so maybe you don't put everything you can in at once, or even now that we're back up at 6,000, do some of your clients look at alternatives, whether it be a different area, different geography in the world, or maybe...
I'm definitely not a sort of just invest in the S&P 500 person at all, and never have been. I think, with my training as an investment manager, it's always been to look globally, and then also at the different asset classes. So that diversification is key. And I think the alternative space is really interesting. Things like corporate bonds as well, just making sure that it's not just the equities, that you've got a spread, geographically, you've got the currency, and then alternatives, I think.
Yeah. So, and in the course, do you get as far as talking about all those things?
Yes, I like to make sure that people feel empowered to go and set up their own portfolio, and that it's diversified. So we go through looking at how would you actually build this yourself? What would it look like? Again, not giving advice on it, but I will show different options and explain the risk of it, but also that you are spreading risk by diversifying.
Yeah.
And it's making those things not scary to people. It's quite reassuring and
demystifying.
Totally, and the confidence levels go. I mean, every time I've run the course, I've gone from people 1 or 2 out of 10 to about 7 or 8 out of 10. It just in a matter of weeks. So it's really kind of I love it because it gets people feeling calm and confident about investing, that it is for them.
And it's primarily women that you coach.
Yeah.
Well, I'm sure you're going to. It's growing all the time, isn't it? You're going to be busier and busier. But certainly, if there's anybody watching that feels that somebody in their life might benefit from this, where do they find you?
This is Philly Financial on TikTok, and phillyfinancial.co.uk is my website.
Awesome. And we can have a quick look at the website. There you are. So yeah, why financing coaching on your approach and everything. And you do groups as well as one-on-ones?
Yes, I do. Monday nights. We actually start tonight, 8 till 9 p.m.
Right. That's a brand new course.
Brand new cohort. Yeah, starting tonight.
Is there any places still left?
We've got a few places.
Get my sister on the phone.
So for women earning over 100,000, it's pretty much professional women going up the rungs at work, busy, don't often stop to think about what matters to them, what they're doing with their money, kind of feeling like, have I missed a trick? Quite often they want to check what they're doing is right. Often either have money saved but not working harder than just cash.
Yeah.
And it's that element of being busy, but actually if you can give yourself an hour a week, you're then set up. Basically, we get you feeling so calm and confident that you just know what you can do with your money.
Are you surprised that there isn't the level of education needed and other people like yourself that are actually going out and trying to make a change?
There's just, I think there's so little out there really that there's a huge need for it, and even though there are more people training to be financial coaches, I guess it's just reach really. If we can get it in more in schools, universities.
Yeah.
I'm trying to help with grad schemes as well, just to try and get people as they start working. Most people I speak to in their 30s, 40s, some in their 50s say, "I wish I'd known this when I was 20," and you could really get people going sooner because you don't need to start with very much. That's the thing.
Agree.
You have to try a little bit harder when you're older.
Excellent. Philly, thank you so much once again for joining us.
Thanks so much.
And I look forward to seeing you in the future.
Great, thank you.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG reds, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. At IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hello and welcome to Trade of the Week on Monday, the 9th of June 2025. Today what I would like to do is to go long Brent crude oil, because if you look at the daily chart, what we can see here is that we are heading towards resistance here, and it's been a sideways trade for much of the month of May, but that to me looks corrective, and I do believe that with the last upswing we saw last week, we could be heading higher. Plus, if you look at the short-term resistance, you can see here, let me make this line thicker so that you can see it better, that we are basically, we've broken through this resistance here, didn't quite take it out, and then on Friday of last week, we actually went above this resistance here, our last reaction high. So I do believe we'll see further upside. Ideally, you would have a stop below the lows seen on Wednesday the 4th, but that's quite tight. If you can have a wider stop taking you all the way down to the late May low. But to me, this looks as if, yes, we are going to at least test the upper boundary of this resistance area here, which ties in with the early March lows. And if we manage to break above there, we could potentially be heading back up again towards the 74 area or so on Brent crude oil. So before I go into today's trade of the week, I want to mention also last week's, because I forgot to do so, and New York Sugar, basically, if you look at that, I'll just bring the chart up, unfortunately stopped us out, and that's why we only risk 2% of capital on each trade. You can see I told you here about all this support going back many years, and I was expecting it to hold all these previous lows here. And our stop was just below the January low, but unfortunately, as you can see here, we did get stopped out on an intraday basis, and basically that trade has lost us on 2%, and now the sugar price is going back up again. So if you are still long, perhaps having a stop below the low seen on Friday here might be an option for you, and we may still head higher, but right now it does look as if we've got stopped out on that one. So let me just go back to Brent crude oil, today's trade of the week. What I would like to do is to go long Brent crude oil, and the reason for that is technical. We've taken out a minor resistance line. It looks as if momentum is pointing upwards again, and if we do so, we need to have a pretty tight stop, probably below the low seen on the 4th of June, and that on the daily financial bet comes in at 64.13. And I have an upside target of around $73 for that trade. Hi, and welcome back to Technically Speaking. And what I'd like to do is just go through my trade from last week, which didn't work out, and how important it is to only risk 2% of capital per trade, because you can easily get a series of 4 or 5 trades wrong in a row. And we've seen that earlier this year on Trade of the Week. At the beginning of the year, we got quite a few of those wrong. And if you have 2% of capital as risk, then yes, you're down 10%, but you need to make 11% to get back to where you started from, but that is possible. But imagine you've risked 10% of your capital. By that I mean, if you have £10,000, for example, and you're risking £1,000 per trade, you get 5 of these wrong. Well, if you've lost £5,000 of your £10,000 initial capital, and now you need to make 100% profit just to get back to where you started from, to get back to break even. So for that reason, on Trade of the Week, we only risk 2% of capital. Now you might say, oh, I'm not going to make much money doing that. Well, it depends what your definition of much money is. Yes, you probably won't make hundreds of percent profit per year, but last year on Trade of the Week, we made 31%. I think on average, we made 19%. Over the last 6 years. So it's definitely possible to make money doing that. It's just you're not shooting for the stars. But then again, your downside is also very much limited. So yes, on that trade here with regards to sugar, what I tend to do, and I did it last year, but a lot of viewers thought it difficult to do because you've got to place a stop loss like that. But I like to see a daily chart close below a major low, such as the January one, for me to basically stop myself out here. We did see an intraday move below there, and then we did actually see on Friday a close on this hammer. But can you see that that close was just marginally below that low here? So yes, it's possible, and it would be Sod's law, that this is just a hammer formation. If we close like this today, that is actually short-term bullish, that we are now finally heading higher again, and that we just got stopped out at the lows. The problem is if you always say, oh, I'm just going to wait and see if a major level gets broken. Well, if your view is incorrect and you have a big move like we saw here in December, mid-December, you could lose far, far more. And that's what quite often happens when people have positions on them, which are short-term trades. They go against them, and then they think, oh, no, it's just a long-term position. It's going to come back at some stage. It may, but in the meantime, it may, fall another 30, 40, 50%. And we don't want to do that. We always want to make sure that our risk is capped to the downside and that we might get a trade wrong, lose 2%, put another trade on, perhaps lose 2% again, but then get another trade on which works out, and we have a 2 or 3 to 1 risk-reward ratio. Suddenly we make 4% or 6%, which compensates for the previous losses. So that's my approach to trading. Normally, I like to trade in the direction of the trend. Right now, these trends are quite mature, though. So, for example, if we look at the NASDAQ, you remember we went long the NASDAQ 2 weeks ago. So here, that trade worked out quite well. We had an upside high of 22,000. We nearly reached it. Last week, I said we could just get out of break even because we had this correction to the downside. But you can see here that these trends are sort of losing upside momentum close to quite significant resistance. So it's possible that we may not continue with the same sort of speed we've seen in May to the upside. And therefore, buying here, I mean, where's your stop? Your real stop would be at least down to the 30th of May low, and that's quite a long way away. So from that point of view, it's quite risky to do so now, which is why I don't want to go long again here. But can you also see what's slightly worrying me is that if you look at the relative strength index here at the bottom of the chart, can you see that these higher highs we've made, and this is a 4.5-month high we made last week, that's higher than the previous week's high, and that's higher than the highs seen in mid-May. All of these 3 highs were followed by 3 lower highs here on the relative strength index, and that's showing you negative divergence. So potentially what we are actually seeing is the probability shifting to at least a short-term correction being seen. Now, how could that unfold? Well, if we were to fall through the support line here, then perhaps we could see a reversal take us down again towards the late May low. So that is a possibility. If you draw a trend line on here at the moment, we're still in an uptrend though, so I'm not saying that it's going to happen, but I'm saying I'm comfortable buying at the current levels because of my risk-reward setup not being very favorable, because even if I'm right and we can make a new all-time high, we're not, from a risk-to-reward point of view, making it that advantageous to us. And you can see here we're still holding above that uptrend line, but perhaps today we might slip through it and have a minor correction take place. So we'll have to see. Let's see whether I've got any questions from anyone. I haven't at the moment. I apparently do have questions. Oh, I do have questions. Sugar we covered, the FTSE 100. So yes, sugar, if you're very short term, if you're still long, probably the stop is now, if you haven't been stopped out before Friday's low, because if it goes below there, you know, you're probably wrong. That's the one I mean here. This low here, this hammer formation, below that low, short term. But yes, from trade of the week point of view, we would have been stopped out at the January low, as I just said. Now the FTSE 100, what we're seeing is quite similar to the NASDAQ 100 I showed you. You can see here that we're losing upside momentum. And we are also seeing a lower high on the relative strength index. Can you see this one's lower than this one and this one, even though we've had marginally higher highs since the end of May. So we have higher highs, lower highs on the index. So that is negative divergence. In about 70% of cases, it does tend to lead to at least a short-term correction being seen. And can you see here, we've got a minor, this is not an uptrend line from down here, it's just a support line here from these lows, from the May lows. And you can see, like the NASDAQ, we may today test that line. And if we were to fall through it, we could see a minor correction taking place over the next week or so. So just be aware of that. And also, if you look at the German DAX 40 index, can you see a similar pattern? Because here, can you see we made a higher high, an all-time high again last week on Thursday, above the highs seen at the end of May. So we had a series of higher highs. And on the relative strength index, we've got a series of lower highs. Again, negative divergence. So we've got lots of different markets having the same chart patterns. The odds are pretty high that you may see a correction against the overall trend, in this case, the uptrend. So I'd be quite cautious now, or from my long positions, I'll probably move my stops quite close to the market just to see if the market were to retrace lower, just to cash in some of the profits we've made since being long over the last month or two. So I've also got questions. Again, somebody's got a big position on Rheinmetall, I'm sure, because that's what we looked at last week. And Rheinmetall, as we can see here, this was last week's move. We still had an uptrend, and that has now been short-term breached. Can you see here we've fallen through the support line, and right now we're looking slightly toppish, because if we were to fall today through that low seen on Sunday, but that really doesn't count because it's Sunday trading, so I would ignore it on the daily financial bet. So I would probably look at the low here from Tuesday, the 3rd of June, which is likely to happen today. Yes, we may see a correction. Having said that, it may just be what is called an A, B, C correction. So it's just a corrective move, taking us down perhaps to these lows, going back to the 22nd of May, slightly lower perhaps. And you can see here the 30-day simple moving average perhaps to that area here. And then, as we saw here, that was just an ABC correction, and then the trend continued. So then we had further upside. So short term, yes, we may correct. Yes, we may perhaps go down again towards the mid-May lows. That is a possibility. But longer term, this trend still looks bullish. If you look at the weekly chart, can you see here that we are starting to keel over those? So that on the weekly chart could indicate that on the daily chart we are seeing a minor reversal. If you've been long for a long while, perhaps for this reason, it is time to sell a call against your position, so a covered call, or perhaps just to cash in some premium, or perhaps get out of some of your longs, because on the weekly chart now we've got this Harami pattern. We look as if we're closing below here. If you're wrong on that trade and the trend continues, you just go long again against this high seen from the 26th of May. But yes, on the weekly chart, we may see a minor correction taking shape, but then again, we have to see whether we hold there or not. Bellway, we've got a trading statement. I'm going to write a piece on that later today, so look out for that on the IG website. But yes, the trading statement will be very interesting for Bellway tomorrow, I believe. What we're seeing on the Bellway share price on the weekly chart is consolidation, as you can see here. We've had really good support here, and we bounced off that area back in January, and we had a retest in April, and that was quite successfully taking us higher. So if we look at the daily chart, what we can see here is that we've had a very healthy uptrend, and all we're seeing now is a corrective move lower. This could be an ABC early wave correction. This could still be part of it. So basically for me, as long as we stay above the low seen on the 23rd of May, on that low there, we should remain bullish longer term, because that's the last reaction low. This low is lower than the one to the left and to the right. You can see here a big rejection of that down move to the upside. And yes, we're drifting lower. But if the trading update is not bad, we may very well break through this resistance line. And in that case, we could head back up towards the high seen in May, and possibly even go back towards the 300 area here. You can see the 30 area here, towards this resistance area here. And I'm talking about the financial bet, so in this case, it's a 3,000 area daily financial bet. So yes, Bellway probably has further upside in store, because usually what a market does, it goes up, corrects, and then has another up leg. So it's up, down, up. What happened here with Bellway, it did try to go higher, but then it sort of stopped people out just below these lows, Sot's law, and then it went up again. So I would expect another leg to take it higher at some stage. But right now, as long as you stay above that 23rd of May low, we are still looking bullish. And Robinhood, let's have a look at Robinhood. I'm looking at the wrong chat apparently. Oh yes, okay, sorry. So I've got Fibonacci extension. Can we use Fibonacci extensions to look at downward moves? Yes, we can. So let's just look at Rolls-Royce. We can see what to do. But a Fibonacci extension you would normally use to look at, if you trade in new all-time highs. So for example here, let's just go onto a weekly chart and do our Fibonacci extension together. Let's actually go onto a monthly chart. And you can see Rolls-Royce has done extremely well. Everybody talks about NVIDIA, but look at Rolls-Royce. I mean, come on. And lots of people don't talk about it. And also with regards to Rolls-Royce, what is interesting is it's been overbought since basically June of 2023. And some people sold into that because it's overbought. Overbought and oversold doesn't mean anything per se. Markets can stay overbought much longer than you can hold a short position against it. Here, for example, you can see we've been overbought ever since. And yes, we're at extreme levels, but we're still pointing higher. So how would you do a Fibonacci extension from this move? You take the lowest move of the last upward move or decline. Normally I would take this move here, protected upwards from that move, but we went below this previous low here. So in that case, what you could do is just take the move from this low there to this high here, and then extend it upwards to that high. And you can see we've gone all through the Fibonacci extensions. We went much higher than that. So if that happens, what you could do is go further back in time and take, for example, this extension here from this low back in 2003 up to the bull market high in 2014, back down to the bear market low on the Rolls-Royce share price, I'm saying, on 2020, and that gave me these Fibonacci extensions. And oops, sorry, I just need to redraw these. And these Fibonacci extensions, I mean, the 161.8 got hit, and the 261.8, that would be the next upside target from a long-term perspective at 993.8 on the daily financial bet. So that is the next upside target. Now, the question was, can you use Fibonacci extensions in the opposite direction? You could, but what you would look here out for on the daily chart, for example, is retracements, not extensions. How far can this move, the previous move, retrace? So what you do is you don't look at a Fibonacci extension from the high, because where you take your extension from, there isn't a move yet. What you need is a sort of down move, up move, and another down move to have an extension. You haven't seen that here yet. So what you want to see instead is from that move on the 7th of April low to this high, how much can we retrace lower going forward? Well, what you do is you take the retracement from the lowest point to the highest point on your chart. There we go to the high seen on Wednesday, the 4th of June. And that will give you these lines, 23.6. And can you see the 23.6 ties in with these previous highs? And these are more important than the Fibonacci levels. These are the previous highs and lows, a confluence of these, which act as support now because they acted as resistance in the past. So that's because of inverse polarity. So the highs going back to March, basically on the daily financial bet between sort of 815 and let's say 805. That is our support area. It's also where the 30-period moving average is coming in, and it's also where the 23.6 Fibonacci retracement comes in. Normally, when you've got a normal retracement, it goes back to the 38.2 Fibonacci retracement. So that is basically another possibility. And you can see then below there, we've got a 50% retracement. It's just a halfway retracement of that up move, which would tie in basically more or less with a late March low. And just below there, we've got this low on the 11th of March. But right now, what we're seeing is just a minor correction in a very healthy uptrend. So unless we were to fall through this key resistance area here in the past and now support area around the 800 mark, I would still be longer term bullish on the Rolls-Royce share price. So let's also look at LGen very quickly. That's the last one because we're running out of time. But here what we can see is a break on the daily chart and a daily chart close last week above the high seen on the 23rd of April. That is healthy. The next upside target is this spike high here we saw on the 7th of February on the daily financial bet at 265.85. That's our next upside target. The trend is very healthy and it looks to me quite bullish. The only thing that I would be slightly concerned with is these highs here going back to January of 2024, and that's at 258.80. That may still act as short-term resistance in the next few days. So maybe we might be capped there if that is the case. If not, that trend should continue to take us to this high. If we were to hit that level, it could be potential resistance where support, the previous highs here going back to the 23rd of April. Then we've got also really good support going back to the 10th of March and the 19th of March. That's around the 250 mark. So basically for me, as long as you stay above 250, LGen is still in an uptrend. Thank you very much for watching Technically Speaking with me today, and I hope to see you again next week. Thanks, goodbye.